Tony Rodriguez joins us. He's head of fixed income strategy at Nuveen Asset Management. Tony, you've been around the block a few times. You've seen markets come and go. What do you make of the last, several days, several weeks?
Well, I think that one of the really generally unique aspects of this is that it really is truly a U.S. policy-driven crisis, a self-inflicted wound, as people refer to it. So it's really not going back to your playbook around, the economy and tariffs. There's a lot of logic to all of that history, but the approach that the U.S. is taking right now doesn't fit into any of those models. So the chaos that it has created is not surprising, given that the approach is chaotic.
So how are you guys at Nuveen changing the playbook at all? What are you guys doing here?
Sure. So number one is you need to really be fairly conservatively positioned. You can't have a lot of confidence in your outlook because you don't know what's going to happen with the next tweet or whatever. So you need to position a little bit more conservatively. So that means in terms of your risk taking, it can't be at its highest levels. You also need to be more diversified because you're not sure what industry, what country is going to be targeted next, right? And you need to have more liquidity. And you're seeing that in the markets with people moving towards greater liquidity to protect their portfolio, but also B, to have powder dry to the extent some clarity does come back into the forecast, and you can try to understand and look for where maybe the opportunity and the dislocation is greatest.
So are you guys holding more cash than you typically do?
We are. We had our investment strategy meeting yesterday. Portfolio managers holding more cash than they typically would. Portfolio managers sitting more kind of in the middle of their risk budget than they normally would.
It's April. What is it? April. Who's looking at a calendar?
It's Masters Week. That's all I know.
It's Masters Week. Exactly.
It's only Wednesday.
Thank you. We're deep into 2025. People are going to get their quarter-ending Nuveen statement. It's actually going to be pretty good before this, disaster. And then there's going to be the June 30 statement, which is going to be like July 16th-ish. Our listeners and viewers are going to see price down. What do you hold bonds in dollar cost averaging like equities? What do you actually do when your bond portfolio goes down?
Yeah, and Tom, people talk about seeing that statement, but investors are voting right now with their feet, right? You see
retail is voting?
Retail is voting. You look at outflows, you look at the high yield market, for example, that had one of its largest weekly outflows in the last 10 years. So investors are voting with their feet. They're repositioning already because they are seeing how markets are down. So in terms of dollar cost averaging, our view is that the biggest negative hit to kind of interest rates and therefore fixed income prices is front-loaded, right? The inflationary impact of the tariffs hits immediately. The negative kind of growth hit is a little bit more delayed. It starts happening, but it keeps getting worse. And that is more of what we think of as a second half of 25 or 2026 event. So higher rates now, we think will be followed eventually by lower rates because that growth hit, that impulse will overwhelm the current inflationary spike.
We're trying to take a break here from the financial crisis that Greg Peters was just talking about. So let's avoid that with futures down 93, Dow futures down 700, the yield space. Look at Paul, 17 basis points in the 10-year, 4.46%. Let's stay on financial planning with bonds. What do you do if you're in a 7-year laddered muni bond portfolio? Do you call up Tony Rodriguez and say, go to cash?
If you're in that portfolio, first of all, you really thank goodness that you weren't in the equity market, right? So when you think about areas of the market that are less exposed to the tariff hit, there are certain segments, securitized credit, for example. The municipal market is one of those where it's not directly impacted. It suffers certainly the impacts of slower growth, lower risk tolerance, greater needs for liquidity, but it doesn't get directly negatively hit by a 50% tariff, a doubling of that to 100%, et cetera. So you are already in a fairly conservatively positioned portfolio. So I think you do hold that, ride it out.
Okay, this has been great. Tony, thank you so much. Tony Rodriguez with us from Nuveen today.